Welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because the Bitcoin relief rally continues. So far, we've seen a nice bounce off of the cheap region as investors stepped in 2 weeks ago to buy when Bitcoin was below 84K and then stepped in and bought once again on Monday when we retested that area. And as a quick reminder, I have a long time horizon on Bitcoin, so I try to be in a profit-taking mindset whenever I consider it to be expensive and an accumulation mindset whenever I consider it to be cheap, based on how extended it is from that 200-week moving average. And in case you don't like the values I've selected for those regions, it's nice to see that the on-chain data agrees with the Bitcoin MVRV extreme deviation pricing bands, also putting Bitcoin right between fair value and cheap. And of course, this doesn't mean Bitcoin can't go lower and this has to be the macro bottom, but it is the exact same area where Bitcoin bounced in the previous major downtrend. It's actually crazy how similar this price action continues to look to 2021 and 2022. You have a false breakout, range breakdown, break below the 50-week moving average, and then bottom in the previous trading range and bounce. And what do we see this time around? False breakout, range breakdown, break below the 50-week moving average, bounce in your old trading range, just like the previous cycle. Now, although this price action has definitely rhymed so far, we know Bitcoin loves to catch investors off guard and do something different, so I don't want to be too complacent in the assumption that it's going to play out the exact same way this time around. These Bitcoin relief rallies are usually pretty difficult to navigate because there's always a ton of volatility and sentiment is all over the place. There was a very quick 5% sell-off on Sunday that liquidated quite a bit of leverage and convinced everybody the relief rally was canceled. This fear and uncertainty was further exaggerated on Monday morning when China banned crypto for the 917th time. And in case that wasn't enough fear for a Monday morning, the yen carry trade experts also came out in full force as Japan's 10-year bond yields rose above 1.86%, the highest since 2008. And all of these factors combined resulted in the fear and greed index briefly falling back into the extreme fear region Monday morning. And that's why Monday's free weekly report was called Looking for Strength. So many metrics were pointing to a relief rally and we just needed a catalyst. And what do you know, just a few hours later, Vanguard, the second largest asset manager in the world, announces they're going to be bringing the crypto ETFs to their platform. And then the following day, Bank of America backs a 1 to 4% crypto allocation and says its network of over 15,000 wealth advisors can now recommend crypto exposure for the first time. So now everyone that panic sold because of the bearish narratives like the China ban and the Japanese yen carry trade implosion are wondering if they should FOMO back in because of the bullish narratives like Vanguard offering crypto and Bank of America allowing their wealth advisors to recommend it. This is why I try to ignore narratives and try to have a more systematic approach, because narratives are always the most bullish at tops and they're always the most bearish at local bottoms, like we have seen this entire cycle. So how am I positioning right now and what am I doing with my portfolio? No changes were made to my portfolio this week. For now, my cash allocation is very close to its target, so no changes were required. As I mentioned on here, I bought the dip the past 2 weeks because of how extremely fearful sentiment was and how likely I believed a relief rally would be, and I'm going to use that relief rally as an opportunity to reduce exposure and de-risk a little in case this downtrend does continue. And as always, if you'd like to learn more about my portfolio system or mental models I use to navigate this market or common mistakes I see so many investors making, you can check out the Crypto Enjoyers program and community in the video description. For now, it does look like the Bitcoin daily chart death cross confirmed another local bottom just like the previous 3 did. I do expect this one to be a bounce into a lower high that gets rejected, but I would love nothing more than to see it reclaim that major pivot at the 200-week moving average and prove me wrong. That's just not my base case as of right now, based on current market structure. The 3-day RSI also says Bitcoin is overdue for a major bounce. Now, this doesn't mean this has to be the macro bottom, but it does mean that we will see a strong bounce at the very least. We see the same thing if we take a look on-chain at the Bitcoin on-chain trader realized price and profit loss margin. On-chain traders are at a loss right now, means we're probably going to see reduced sell pressure from them as they don't want to lock in those losses and instead decide to hold. We also see the exact same thing with the Binance Bitcoin to stablecoin reserve ratio, showing us the ratio of Bitcoin to stablecoins on Binance. Usually when the ratio is this low, it means there's a lot of dry powder in stablecoins to buy up the Bitcoin dip and create a strong bounce like April of 2025, March of 2023, January of 2023, and July of 2022. So we'll see what happens. But as always, if we want to survive in this market, we have to be prepared for multiple outcomes. As somebody who has been bullish over the past 3 years because Bitcoin was in a macro uptrend, my base case now has to be that Bitcoin entered a bear market because we broke that macro structure. Again, I would love to see Bitcoin reclaim these major levels and confirm this as one big bear trap. That just can't be my base case based on the recent breakdown. And to be fair, there's really strong arguments on both sides. The bulls will tell you the 4-year cycle is dead and we're going to make new highs in 2026 because the Fed is going to start easing and we have all of these US crypto bills around the corner. And the bears have a pretty good counter argument in that if the 4-year cycle is dead, why are we watching Bitcoin top in Q4 and roll over on the monthly MACD just like it did in 2022, 2017, and in 2014? Now, the bulls, of course, will point to the MACD fakeout we had in 2019 and say that's what's happening again because the monetary policy from the Fed is similar to that time period. And I really hope they're right. I just don't think that's enough to 100% bet that that's the outcome that has to happen. And the bears would point to these ETF outflows and lack of fresh inflows coming into these Bitcoin spot ETFs. And they would ask the bulls why we're not seeing any major inflows, even with all the positive catalysts on the horizon, because we know markets are forward looking. Why isn't the smart money piling in here when Bitcoin is at a 30% discount? And the bulls would, of course, reply by telling you to zoom out and point out the fact that 2.3 billion in outflows in November is a drop in the bucket compared to the almost $100 billion that has flowed into these ETFs over the past 2 years. And the bears would, of course, point to the Bitcoin strategic reserves and how there is almost no buying right now compared to what we saw from January to July of this year. They would point to how the largest Bitcoin strategic reserve, MicroStrategy, is putting in lower highs and lower lows, just like it did last cycle as Bitcoin was getting ready to enter a bear market. Raising a $1.4 billion cash reserve to quell investor fears also doesn't instill a lot of confidence on where strategy expects Bitcoin to go. It really reminds me of the famous steady lads deploying more capital from 2022. I also can't believe they're even floating the idea of selling Bitcoin if Strategy's MNAV goes below 1 to buy back shares. Strategy is putting a big target on its back by announcing this publicly, and investors will put a lot of pressure on them to sell Bitcoin if the MNAV drops below 1 now. This reminds me very much of when they published their MSTR equity guidance in August of this year when they were facing major backlash for MSTR underperforming Bitcoin, and they said they would no longer issue shares whenever the MNAV was below 2.5. But this ended up having the opposite effect of what was intended because it meant that MSTR could no longer issue shares and make big Bitcoin purchases, which resulted in Bitcoin going down, and Bitcoin going down just resulted in MSTR going a lot lower. So although I still expect a mean reversion relief rally, I still expect MSTR to then make new lows. So we'll see what happens, but it's still crazy to think that Bitcoin has brought in $732 billion in new capital this cycle, more than double what it brought in the last cycle. And it's crazy to think that Bitcoin settled $6.9 trillion in volume in the past 90 days. So we'll see what happens. I do expect December to close green as part of this relief rally, but what I'll be watching very closely is how this yearly candle ends up closing. So far, 2025 is the worst post-halving year that Bitcoin has ever experienced. You can see that very clearly with the huge wick to the upside and the fact that the candle is red as of right now in December. It's way worse than 2021, which had a big wick as well, but still closed quite green, and 2021 was worse than 2017, which had a smaller wick and an even bigger green candle, and 2017 was worse than 2013, which had almost no wick to the upside and closed near the highs in that post-halving year. And that brings us to macro. It's nice to see the GLI showing early signs of a new uptrend here after going sideways for over 5 months. This is, of course, being driven by the fact that a December rate cut is pretty much a certainty right now at nearly 90%, but then we're only expecting two more over the next 12 months, one in April and one in July, which I believe is not enough. This economy got used to rates being near zero for a decade, so I don't think the Fed is going to be able to keep them as high as the market currently anticipates. But this recent increase in rate cut odds is putting downward pressure on the US dollar, which is good for liquidity and risk assets. We've also seen a loosening in global financial conditions, which is usually a tailwind for the ISM, which is our proxy for the economy. We also know that quantitative tightening has ended and QE will start sometime in 2026. And we also know we're going to be seeing a new Fed chair, which will most likely be Kevin Hassett, based on the current prediction market odds, and he should be quite a bit more dovish than Powell. So although I expect large corrections along the way, I do still believe our global liquidity index macro breakout is underway. The S&P 500 continues to look solid here and maintain its uptrend. And if we do see it re-enter price discovery, that would be a great tailwind for a Bitcoin bounce at the very least. Bitcoin is working on a bullish range reclaim right now. If we can close this weekly candle above 91K, which should result in at least a revisit of the range mid and maybe even a revisit of the range high. And then we're going to have to see how price reacts there. Gold continues to consolidate, which should give risk assets some room to breathe. We know the Fed can't be too hawkish because the labor market continues to weaken. We can see it in the unemployment rate, initial jobless claims, continuing jobless claims. We will finally be receiving an update to inflation data this week. We want to see PCE and core PCE come in below expectations to keep rate cut odds where they are. We really don't want to see a beat to the upside if the market is going to hold on to this rate cut hope. As for recession concerns, the Atlanta Fed real GDP estimate for Q3 is above 3.8%, so no recession on the horizon as of right now, and that continues a trend we've seen over the past few quarters. I don't see any major warning signs for recession quite yet. As for Ethereum, a great reaction off of that range low we've been monitoring with some nice false breakdowns below there, which is exactly what you want to see at a local bottom. Target 1 would be range mid and target 2 would be range high, and I expect that to be major resistance like it has been this entire year if Ethereum is even able to make it that far. That, of course, is going to depend on what Bitcoin does. And it's nice to see TA aligning with on-chain data once again with the Ethereum MVRV extreme deviation pricing bands, putting Ethereum right at the cheap region where you would expect a strong bounce at the very least. And it went even lower than it did last cycle before getting that major bounce. And you can never have bullish price action without adding bullish narratives on top. This week, the CME came out and started talking about an Ethereum super cycle and talked about it on their official X page because Ethereum's volume is outweighing Bitcoin's right now on the CME. And how can you blame them for shilling Ethereum when they see this kind of volume growth on their platform for their Ethereum futures products? I see a lot of people talking about Ethereum being undervalued, and I saw this chart circulating that talks about 12 different valuation metrics and how they have a composite fair value of 4,800 for Ethereum. I don't put a lot of weight into this, especially because what I consider to be the most important metric, revenue yield, actually says Ethereum should be at 1,300, so that's why I like to rely a little bit more on market sentiment and TA. But it is interesting that this puts Ethereum at a fair value of 4,800, and I'm not surprised bullish narratives like this are starting to go viral on X because the price action is starting to look a little bit better. As for Ethereum ETF inflows, still really not much going on there, similar to Bitcoin. Same thing with the Ethereum treasuries. Bitmine bought about $70 million worth of Ethereum this week, but aside from that, it's been very quiet since they're having trouble raising money to buy more Ethereum at this time. And you can see that these Ethereum treasury purchases have been getting smaller and smaller every month since August, and that's also conveniently when Ethereum topped against Bitcoin, but it is still holding up quite well and is still putting in a major higher low on its Bitcoin pair compared to where it bottomed in April of this year. As for altcoins, they're still holding up okay relative to Bitcoin. So the altcoin season index is still sitting at a 35 and the Russell 2000 is still consolidating at its previous all-time high, trying to break out, which would be a great sign for risk assets. Similar to Ethereum, Solana was also able to hold its range low and get that bounce. So target 1 would be range mid and target 2 would be range high. Anything higher than that would require a bit more optimism than I have right now, just based on what Bitcoin's doing. but the strength of this rally will come down to what Bitcoin decides to do. We continue to see great developments for Solana, with Kalshi announcing they're going to do tokenized betting contracts on there and talking about it on their official X page. The Solana ETFs continue to get very solid inflows. And it looks like we saw capitulation with that recent test of the range lows similar to April of 2025. So that should result in some reduced sell pressure here and give Solana some room to bounce. And it continues to look quite solid on its Bitcoin pair, maintaining that higher high and higher low structure. So although 2025 has been a rough year against our benchmarks, the S&P 500 and the Nasdaq for Bitcoin, Ethereum, and Solana, I still believe the future looks bright. Tokenization as a trend is not going anywhere, and BlackRock, the largest asset manager in the world, continues to rave about it and publish articles about it. We still have the Genius Bill coming, which should be a huge tailwind for stablecoins and bring a lot of liquidity to this asset class. We also have the market structure bill, which should help quite a bit with manipulation and bring a lot more volume to the US. And we're expecting a lot of regulatory clarity in 2026, with Paul Atkins, the SEC chair, saying that the SEC plans to unveil an innovation exemption for crypto projects in a month or so. So we'll see what happens. But as always, as we look forward, the federal government is still running huge deficits, now already 10% ahead of where the fiscal deficit was at the same time last year. And that trend continues to worsen year after year. Exponential debt growth results in exponential money supply growth as the currency gets debased and the debt has to get monetized, which is a bullish tailwind for our risk assets that we price in the devaluing fiat currency like the S&P 500 and fixed supply risk assets like Bitcoin. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.